people who are actively like really good at that and looking at the systems and going, okay, we should be at this price for tonight or this week. Yeah, that's a game changer. So you don't let your management decide; you actually get involved in that part.
Yeah, so for revenue management, right now we are using services from Hilton. Hilton has their own actually software system which is called RMCC, and they are with us on weekly calls where we see the trend in the market, and based on that we decide on the rate. But obviously the recommendation comes from Hilton because they have a software which does the market analysis and everything. So as an owner, we don't have to do so much on the revenue management part of it.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Beau Eckstein.
All right. Good morning, America. This is Vinney Chopra and Beau Eckstein, my co-host. We come live to you every Friday at 9:30 Pacific, 9:30 a.m. Pacific, 12:30 Eastern. And we are very excited that you could join us. Please let us know where you're from, what state, what city maybe, also your name, and get ready for some great questions because we got a great guest actually right here. He joined in and I think he's getting connected again. But Beau, how are you, brother? I'm back from Cancun, all excited and all tanned up and everything.
Yeah, it looks like you had a lot of fun. And
I know. It was amazing fun. Let me introduce our guest speaker, Shalu. Shail Thakur is in the house. Actually, I've known Shalu for a few years now, and I would like to tell a little bit more about him, and we'll dig into his story, and it's going to be very exciting. Shail is an IT consultant and a real estate investor with educational background in electronics engineering, and he has investment in single family homes like many of us, and duplexes and fourplexes and a hotel, as a matter of fact. And I'm also partnered with Shalu in that hotel, Hilton Garden Inn. You have heard about me saying that sometime, and we're going to dig into it because Shalu, I want to really publicly say that thank you for all the hard work you put to bring the value from $6 million to $12 million. Wow, the hotel is worth almost double in just a year and a half or so, and he's mostly on the operations side, of the things for all these investments. So welcome, Shalu. How are you, brother?
I am good, Vinny, and thank you very much for having me, both of you. And I'm really excited.
Totally. So tell us, I know you were in New Jersey and you moved to the hottest place in USA, Austin, Texas.
Yes. I was in New Jersey. New Jersey was my home for New York, New Jersey for almost 17 years. Obviously, I'm originally from India, grew up there, did my undergrad in electronics engineering there. And growing up itself, I was not from a well-off family. So I from growing up itself, I knew the importance of making money and then, making investments and all that. So that kind of, that was from childhood. And then I came here in 2004 for my master's in New York.
Okay.
And and then New Jersey, and now in Austin, Texas. Beautiful.
I love it. Wow, Austin is growing like crazy. I know some of the people who have followed us, they know that we bought this property. You know that property too.
Yes.
Yeah, the Renaissance at the park, 308 units. It's gone in value by $11 million. I cannot believe within 1 year. In 1 year, it's gone from 35 million or change to almost 40 something, it's amazing. And we want to buy more. I know we are looking for buying over there more. So tell us more. So you are in electronics, but now do you still practice electronics or no? Not anymore.
No, actually. So after doing my bachelor's, I had a tough time finding a job, being India being an IT hub. So I did a lot of at that time after graduating in India, I did a lot of part-time work just to survive because I didn't want to, ask for more money from my parents. And at this, and selling credit cards is one of the things. At that time, I was a salesman. Then I tried to get into IT, which I did there. But scope and the opportunities in India was not that great.
Yes.
And that's how actually I transitioned from electronics completely to IT after coming to US.
Wow, wow, wow. I want you to really say something. I want to talk about Anshu Bansal also,
Yes.
because you guys kind of studied together, I think, right? Yeah.
Yes. We did our undergrad together.
Yes.
And that was back in 1998, 1999. Yeah, and then both of us were really good friends from that time, and then now we are obviously partners in a lot of other things.
Yes. Bo, buddy? Yeah.
Yeah, no, I have kind of an interesting question. Just so in India, it seems like when I was living in California, we had so many Indians that were in the IT space. Is that like trained in India? You can really, is that because there's a lot of Indians that are in IT. So what's the protocol? Is that highly trained in India, and then you come over to the States to make money? I mean, why is IT such a big industry for the Indian population?
So it's like I would compare it with like how the manufacturing in China, right?
Mm-hmm.
So it's IT is easy to get into in India because there are so many big companies who are hiring, and then there's a trend set, so you don't have to reinvent the wheels. You've seen people who actually get into engineering, then get into these big companies who are doing outsourcing for a lot of companies in US, and that's how the hiring goes. And for the companies, they are charging in dollars to US companies, and they are paying in Indian rupees, which is like huge difference.
What is the spread between an American dollar and a rupee?
Oh my
74
gosh, $1
rupees.
is 75 rupees or something.
Yes.
So it's a pretty big
rupees.
number, yeah.
So when you go back on vacation, you live like a king.
Yeah.
No, so not anymore. Now things are,
Expensive,
honestly, because
yeah.
of the inflation, things are very expensive in India. So in India, if you want to live like king, you have to be super rich. But obviously, compared to the majority of the population, you can live like king.
I was going to say something, when I grew
Yeah.
up, okay, in 1974, I graduated. Boy, I'm aging myself. Everybody knows I'm pretty old. But, the thing is, I used to get 700 rupees a month from the number one company in India. Number one company, Reliance Group, which is number one now. Larsen Toubro was the company I worked at. Bo, I don't know if I told you. That is, buddy, $10 in today's currency a month. I used to earn $10.
Yeah.
No, it was
That's
$7 to $1 at that time. So it's 10 times now. So let's say $100. I used to get $100 a month.
So in India, it's harder to work your way up. Like coming to America, I guess like I see like a lot of people complaining about America, but I look at it that a lot of people from other countries come here because there's so much opportunity. And I think if people lived in another country and saw that it's a lot harder to build business, they would think twice about bashing the United States. I mean, that's what it seems like, at least living here my whole life. But when people immigrate here, I mean, all Americans immigrated here, right? Unless you're a Native American. But it's just interesting because there's so much opportunity in this country, and so many people like they take it for granted. And I think like when I hear stories of people coming over, like Vinney coming over from India with $7 in his pocket, right? Like I don't know. I think people need to stop and realize that there's a lot of opportunity. You can come here and crush it if you want.
Yeah, when you get something for easy, right? You don't have value for it. If you work for it, if you put your sweat to actually earn something, I think you really definitely value it. So that's the reason I think a lot of Americans they don't realize the potential of the opportunities you get in America, because when you come from a country like India, actually growing up, you see all this hardship. And then lack of opportunities. You're doing so much hard work, and then you are getting paid like what, $1 an hour or something like that. So when you come to America, you see all these opportunities. You just want to, you get really excited about it, and you want to work hard. As opposed to the people who are living here, they are getting everything so easily, right? So majority of them, they don't understand the potential of it.
Surely, I was just thinking about it, Shalu, when you said, I know President Clinton said, Silicon Valley, if you come to Silicon Valley here in the Bay Area where I live, I mean, the CEOs, so many CEOs and the high, executives are Indians, in the IT industry. And otherwise, somebody sent me a little, WhatsApp message. Google CEO is an Indian now, by the way, Google's. And Microsoft CEO is also Indian now. Citibank CEO is Indian. SoftBank, which is a vision fund, CEO is an Indian. Adobe CEO is Indian. NetApp is Indian. Pepsi Cola is an Indian. Nokia is Indian. MasterCard is Indian. DBS CEO, and I don't know what that company is. Novartis is Indian. SanDisk is Indian. Motorola is Indian. Harman is Indian. Micron is Indian. I can't believe it. Palo Alto Network is Indian. Reckitt Baxter something is Indian. IBM CEO is Indian. What? I didn't know all these things. Somebody just sent it to me. Ireland's Prime Minister. Okay, isn't anyway. But you know what? Yeah.
I think that just proves the point that, I think the way in your culture you're raised, I can't speak for everybody, obviously, but from what I see and interact, that you're raised, education as a priority and hard work, and that seems to be paying off. People that are coming over from India obviously are doing fairly well. So that's interesting, just to see that, why IT seems to be the prevailing, occupation coming from another country, but also, just knowing that the dollar, the majority of India then it's hard to make money there compared to
not really. Well, right now the salaries have increased a lot. I just mentioned about $700 a month, but now you're talking about lakhs of rupees a month. So even though the cost has gone up, but the standard of living of the engineers, doctors, and other people and entrepreneurs in India, of course, majority of the people are poverty, right? Because of farmers and all there, but close to in the big hubs. What was the other statistic, Shalu? You might know. We are the youngest nation, I think, in the world now. From 18 to 34 years of age, we have 350 million people. What?
Yep. Yes.
Yeah.
And especially last decade and a half, Indian economy has grown so much. Now it's, I think, number 6 in the world.
Yeah.
So things have changed. Like when I think obviously Vinney grew up, and when I was growing up, India was not in the picture.
Yeah.
But now India's economy is big time in the picture. So the salaries have increased as Vinney mentioned, right? The standard of living has gone up a lot in India.
And a lot of countries outsource a lot of their IT, with big companies in India that are, doing it from there. They're outsourcing a lot of, those kind of services. Obviously, like there's a lot of virtual assistants from India, and there's a lot of IT, and there's a lot of call centers and so forth.
Yeah.
Yes. And then apart from IT, because we are talking about hospitality, also majority of owners are Indians. There are a lot of Indians who owns these hotels, like motels to hotels.
Let's dig into that one. I think this would be a perfect segue. Tell us more. I know you're on the operations side of it. So if audience is kind of watching us and listening, and they view it later on also, what are maybe 3 factors you can think of that are very, very important in the operation of the hotel?
The reality of today's economy is hitting home with employers. Employee turnover is now running at over 100% and costing over $2,000 to hire, train, and replace workers. let alone sky-high signing bonuses. But even within this new workplace dynamic, one of the core underlying realities that many American workers have is financial insecurity. 78% of Americans live paycheck to paycheck. 65% of employees feel that personal financial worries impact their health. 44% have less than $400 saved for unexpected expenses. What if one product could help solve both the immediate labor and hiring issues, and also address some of those longer-term worker insecurities and realities without adding $1 to your bottom line? Introducing the digital account with no monthly account fees, no credit checks, no minimum balances, and no overdraft fees. The account comes with a Visa debit card, global ATM network, bill pay, send money, and features Pay Any Day. Pay Any Day, a proven way to reduce employee turnover by as much as 40%. With Pay Any Day, employees can access up to 50% of their pay before payday. Pay Any Day is not a loan, it's an advance. And with the digital account, your employees can get their money when they need it. Your employees' satisfaction, financial wellness is critical to reducing turnover. Make their life easier and they will stay longer. Contact Expense Savvy today to learn about this amazing employee retention tool. Please visit expensesavvy.com/account.
Three factors. The very first thing is that, as you said, right, Vinney always says that managing the management company.
Yeah.
That was a big challenge for us with the management company, because coming from a background of operations in the multifamily, hotel is totally different, because multifamily you have this fixed expenses which you go to any property, you will see that. But in hotel, if you are in a service hotel, if you are in a, there are different categories of hotel. You have motels, you have then full service hotel. And then, so expenses, it can surprise you with the management companies, the trainings, the extra charges they put. So we had to tighten up a lot of things. I mean, just to give an example, the same management company is managing another hotel in the area, Casa. I think Vinney knows about that hotel. And that hotel's NOI is negative compared to us. That hotel has a better sales team, a bigger sales team. They have three actually full-time sales resources, and they are full service restaurants and everything, which actually I think majority of the groups they prefer. So the same management company is giving us positive NOI. Yeah. In fact, we are almost about to make 32% of the NOI of the, on the hotel. So that is the very first thing, managing the management. Second thing is that your GM, your general manager, she is the key resource. I mean, he or she is the key resource. So in what happened with us is that we, as soon as we got into the hotel, within 2 months, obviously the COVID, apart from COVID, our GM, which was working there for 13 years, he left. Yeah. So we were in a difficult situation. At that time, we made a decision because we wanted the same team who have been working for so long. They were a little scared, so we wanted them to, relax. So that's why and then other thing is that we saw the potential in our sales director. We promoted her to become GM. And then now she is working so you have to, I mean, you don't want to micromanage the GM, but at the same time, you want to get involved. So the way we did it, we empowered her. So she's get to make all the decisions, but our involvement is there. Yeah. So we are kind of helping her.
What about right now? Is it, from my understanding, talking to a lot of business owners, are you having this problem too, that it's hard to get the housekeepers, employee retention and hiring is difficult right now? That's across the board, right? What are your plans to attract and keep retain employees? Because it's hard to fill these hourly jobs, right?
Oh yeah. We are facing the same issue also, but not at the biggest a lot. The reason for that is that, again, same thing, because those people have been working for this person for so long, 8, 9, 10 years. So ultimately, you don't work for you don't always work for for the company. You work for the people. So the work environment is so good there, so friendly. It's like a family. So we saw actually shortage in the housekeepers, in the front desk, as well as on our actually dinners, because we were planning to start the dinner services, our kitchen also. But our manager, our general manager, she made sure that all the existing employees, they are happy, and if there are any concerns, she is very open with us. And she is ready to actually, even at the front desk, if we are short, our GM and AGM, they are ready to they actually put extra hours to cover those shifts. But yeah, it's right now, if I try to bring in a new resource, it's hard. It's hard finding people.
Roughly how many employees do you have at any given time?
We have 22 to 23 employees.
And how many keys are you guys?
104. 104.
104. Yeah, 104 we have.
Yes, it's a this is a Hilton Garden Inn in a town called McAllen, which is a border town. And then here the market is totally different than rest of the country, being the border, because you are just like 5 minutes from the bridge, which you cross the bridge and then you are in Mexico.
So you bought this. You guys bought this during an opportune time, and then
we didn't know about COVID, but you are right. It was in auction, by the way.
Yeah. We bought it in auction.
So, and then during COVID, you probably suffered a little bit, but then you guys filled up pretty quickly. And now, what does your occupancy level look like?
Our occupancy right now is 70 to 75%.
Okay.
On an average, yeah. So we got go ahead.
So now with your higher valuation, you've created a lot of equity, right? So
yes.
What's the strategy going forward? Are these, in your mind, are these hotels that you're going to hold like forever, or are you going to 1031 exchange into multiple properties? What's the end plan? I mean,
what's the end game, right?
Yeah.
So for this particular property, we have 2 plans which we have in mind right now. So we got actually great appreciation of the property, as well as I think after we recovered well from the COVID. So we are at a point right now where we can sell the property, because there's enough meat on the bone for the next buyer also.
Sure.
Because this property still has a PIP. PIP is something which is performance improvement plan, which every hotel has, which is required by the brand. In this case, it's Hilton. That's $1.5 million PIP, which we had to do by 2023, June 2023. So if we decide to keep this property for another 3 years, we have to do the PIP, where we are investing that 1.5 million, plus we're going to lose some occupancy. The revenue is going to go down. But after we are done with the PIP, obviously the hotel is going to perform the best. So the two things are in mind. If we want to keep the hotel, we have to keep it for another three years, at least 3 years, because we have to do a PIP, and then obviously capitalize on the improvements which you made. But the more we are inclined to another one where we want to sell this property right now. We want to sell it. We made, I think, enough money. I think it's in the last one and a half year, or almost 2 years, because we closed on December 31st, 2019, and during COVID also, it was the worst year for hospitality last year. So we are more inclined to sell the property, get our money back, and then invest in another property, another hotel. That's what our plan is.
Did you do a cost segregation study on this, or not on this? Yes. So then would the strategy then be to try to 1031 exchange this into another property?
Yes.
So essentially then you're just deferring the recapture and deferring. So because that would be the advantage of doing the 1031 exchange at that point.
Yes. That's where Vinney comes actually in picture, right? when we decide to do 1031. Obviously, we don't want to actually, pay. We don't want to hold on to that money. We want to do the 1031 exchange. That would be the wise thing to do. Yeah, and then that's why we are looking for other properties in the market. But it's hard. Hotels, it's not just the multifamily. It's even the hotels valuation also. It has gone up so much. It's the numbers doesn't make sense.
Yeah,
Like
post-COVID, I think last
post-COVID.
year the numbers were kind of down and everybody was in a frenzy. But now, 2021, we have seen a big shift, right? And I think with this double vaccination and all the travels also increasing, the expectations have gone higher, right, Shalu? That's what you.
Yeah. Expectation has gone a lot higher, especially, I mean, like if you see Austin market, it's crazy. It's crazy. We seen actually, I think 3 or 4 properties in Austin market.
The 3 or 4 and
Yeah,
Gatlinburg. When I went to Gatlinburg, Knoxville, last month or a month back, I mean, 97% occupied, 97%. Dollywood and all. I think we toured La Quinta over there, I remember, and others.
Yes.
So
In fact, the property, the Casa de Palmas, that was in the market. That is another property.
Yes.
And it was they awarded that property to a buyer, Vinney,
Okay.
for yesterday.
Okay.
And then that property has gone actually, I think, more than $14 million. Now, those numbers, if you see the way, because it was bank-owned property and the management company, the way they were managing it, it had consistent negative numbers.
Oh, wow.
2019, 2020, 2021. So we were our valuation was somewhere around 10 to $11 million. We thought that would be a good price, but that went more than $14 million.
that is crazy. Now, as far as I know, we're kind of hitting our 30-minute mark, but
yes.
as far as picking out the flag or flags you want to work with, or buying something and switching flags on the property to create value, let's talk about, there are certain brands or flags that are more appealing. You get more business travelers. So I'm guessing depending on the area, you make, if it's highly business traveled, you're picking a flag that's got a lot of business reward points, things like that. I mean, what's kind of like the high level of finding the right flag or converting a hotel to a different flag?
So our focus is on two flags, Hilton and Marriott, because their point system is really great. So and like our hotel, we don't have the best product in the market. Our hotel is still, the rooms are outdated. We have to do the PIP, but still, actually, the Hilton customers who are loyal to Hilton, they will come to our hotel because of the point systems. And like Casa, which is a Wyndham property, they compared to Hilton or Marriott, Wyndham is not such a great flag in the reward system and all that. So our focus is on Hilton and Marriott. And other than that, actually, from the I think investors' point of view, because we need as a syndication, right? For the investors also, there are a lot of perks in hospitality compared to multifamily. I don't want to say that one is bad or other is good, but because I invested in multifamily also, and now I invested in hotels. The perks in hotel, like in my case, I have traveled like in last 2 years to all the cities, Colorado, Denver, and then Colorado Springs, and then Florida, also Tampa or Orlando. As an owner, I get to actually stay in this beautiful hotels for a very discounted price. I mean, cheap prices. Like just to give you an example, I stayed in waterfront DoubleTree in a single bedroom suite for $45 in Tampa. So those, and then Denver downtown. So those perks, and then I think depreciation also is aggressive in the hospitality compared to multifamily.
Wait, how do you get those cheap stays at the
No.
hotels?
That's actually what it is. It's the owners. When you buy a Hilton chain or Marriott chain, both, you get a special website. That's all it is. Owner's website, as a gesture to the fellow owners. They reduce the price from $200 a night to $35 or $45. But we have to be there. Shalu has to be there to check in, and I have to be there to check in. If our friends we could book 2 rooms also,
Yes.
and but we have to check in. Yeah, no.
Yeah. So Vinney, let me ask you a question.
Yes.
How do you like hotels versus multifamily?
To be truthful, I like both. I like multifamily, senior assisted living also. Hotel, I like it too, because you get to change the pricing. Just like we cannot change the lease. When I get a 12-month lease with the resident, I'm locked in. But in the hotel, in a good market, and when the economy rebounds, of course, then you have 5 different pricing every night. So if there is more demand, then the price will be higher, right? If there is more supply, price will be lower. But the other good part is that if you can manage it well, like Shalu has done, and very rigorously, looking at each and every expense, and we're going to be making 32% or something, close to that on a monthly basis of the revenue. That's pretty darn good. Yeah.
Are you using like software for pricing?
Yeah. Huge.
So
huge.
I know for like short-term rentals, the Airbnb, there's like price labs, and then people who are actively like really good at that and looking at the systems and going, okay, we should be at this price for tonight, for this week. Yeah, that's a game changer. So you don't let your management decide; you actually get involved in that part.
Yeah. So for revenue management, we right now we are using services from Hilton. Hilton has their own actually software system which is called RMCC, and they are with us on weekly calls where we see the trend in the market, and based on that we decide on the rate. But obviously the recommendation comes from Hilton because they have a software which does the market analysis and everything. So as an owner, we don't have to do so much on the revenue management part of the things.
Sure.
Which is a good thing because Hilton makes sure that we get the best rate as per the market condition. And our management company also offered us, that's again another saving, where they were also charging us for the revenue management, where we already had Hilton's services. So yeah, so that's where also we saved money actually by taking them out.
And I'm very impressed. I know, like, we get 145 pages, I think, every week.
Yes.
With all these different reports, Beau. Very thorough, very, very thorough. And, I think it's really great because I know Hilton and Marriott, they don't let, brand new people manage the assets because we didn't know much about it, right? Yes, but now by working with them, with the Hilton company, they manage 70 hotels, I think, plus, one is ours. So that way they are able to give us all the help. And of course, they're very professional. They know what to look for. And, Shalu is in driver's seat with Ash. Ash and Shalu are both, very much in sync with. I show up sometime there, And
no, it's a great team, Vinney. Everyone has their role. Yeah. And I think Vinney has a bigger role to play. We are on the operational side of things. Ash is on the acquisitions, but Vinney and Andy, Anshu, they have a bigger role to play.
No.
So it's a great team. Team, and I think Hilton is also very happy because they, considering the fact that we didn't own any hotel. Normally, all the flags they require previous experience. When you go, like for any other property, you can just go and buy it. But with hotels, especially Hilton, Marriott, you have to have previous experience. And in our case, we didn't have any previous experience. But we got the management company. We paid extra money for that, who had experience. And now we are in a position where we can buy with our experience. We don't need any experienced management company. We can pick our own management company. And we approved to Hilton. To any brand, to any flag, in fact, that we can manage a hotel, especially when you come through the COVID and the bounce back. Even after now, we lost all the medical staff. We have now the other groups, which are government groups, transient business. So now, I think we have done good to prove anyone that, especially flags, that we can buy another hotel.
Love it.
Yeah.
Thank you for sharing all that good knowledge, Shalu. And again, it's about that time. How can people reach you? Thank you for taking the time to be with us. Yeah.
Yeah. So I am not actually big on social media. I think that yeah, but I can share my my Facebook profile. So actually we are actually in the process of coming up with the website where we'll
Very
have our multifamily plus hotel and on small actually
love it.
investment whatever did, and then
Awesome.
after that we can share it.
Oh, wonderful, wonderful. Again, thank you so much, Shalu, for being with us. Thank you, Beau buddy. I know
Thank you.
this was a good one, and we'll go out with a bang, and we'll see everybody next Friday at 9:30 a.m. Pacific.